What's going on, guys? This is David. I am with the Stock Market Watch Group with Robinhood. And today we're going to bring you a little bit of everything. The economic calendar, so what's coming up, what data is going to drive this market. We have our market outlook. We're going to look at the SPY, the QQQ, the IWM, the VIX Volatility Index, and a few other things that also move the market. And then we're going to go through a few things in my watch list. And if we have time for it, I'll show you what I'm trading so you can see why I am trading it. Remember, I am always looking for the base breakouts and those trend breakouts. Those are the two strategies that I am very, very honed in on, very focused on. And if you hear at any time anybody in the Discord chatting it away, it's because they want to be a part of it. They're more than welcome to join in, ask whatever kind of questions that they want to, because we are at the round table, and you can do that same thing by clicking the description below. We are in the Robinhood Stock Market Watch List Discord right now, but you can also join the David Worrell Discord as well, which is in the Linktree description below. So with that being said, we are going to jump right into things. All right, guys, the first thing we're going to look at, as I always like to look at, is the S&P 500. You guessed it right. Why do we look at the S&P 500? Because it is the benchmark for all your retail investors as well as your institutional ownership. The institutional ownership looks at this, and this is the price to beat. On average, it earns, with inflation adjusted, around 8% per year over the past 100 years, okay? That's with the financial crisis, that's with the COVID, that's with everything. You'll come out to an average in the S&P 500 of around 8%. If you cannot beat 8% and you keep on trying and you just cannot do it, then you should have just put all of your money in the S&P 500 so that way you earn that 8%. I think it's kind of funny right now, all my friends are saying, but I'm earning 5% on my savings account. Well, you're getting gypped. It's the best that you could have earned in your savings account over the past few years, and it's guaranteed money. But if you're not going to touch that money, you might as well just put it in the S&P 500, or what I like to say, the VOO or VTI, because in the longevity of things, if you're going to hold for at least 10 years, you're going to make 8%. Okay? Now, these aren't buy or sell recommendations, guys, but let's get right into this. The S&P 500 breaking above its all-time highs around 425, broke above that, and we lingered sideways. I kept preaching about a pullback to the 10-day moving average. Actually, I was talking about this pullback since we broke the 50-day moving average, but we stayed on a beautiful power trend after we broke through those all-time highs. We traded sideways, and then finally, we broke down and bounced off this 10-day moving average. It is a beautiful thing because I was not about to get the rest of my shares in this until we hit that 10-day moving average. So now we hit the 10-day moving average. We are 110% risk on until we break this 21-day moving average, okay? Now, if we start to break down and we start to head back down and we start to retest this 525 again, that's normal. We're going to try and digest a lot of this huge push-up that we had in the overall market. And you'll see when we look at some of the other things, there are some kinks in this chain here. You know, there's a few things where there's a little bit of reason to be concerned because it's not everywhere. We're seeing it mostly in tech. We're seeing it quite a few other sectors as well, but mostly tech with NVIDIA. And as we talked about, we prepped you for the earnings. When NVIDIA decided to rip tater chip to the north side, it took the S&P 500 up with it. So we knew that that was going to happen. And as NVIDIA still continues to climb higher, the market just trades sideways. So we need to look a little bit at everything. So that is going to bring up the next spot, and that's QQQ. The QQQ is looking much stronger than the S&P 500. Why? Well, the S&P 500 is not back up. Clearing this area, this base that I would like to call, is our new area to break through, which is 531.44. We'll just name it 531.50 because those psychological areas definitely help keep the ball rolling. So if we look at the QQQ, you can see we haven't even made a base. And it's all about that base, baby, no trouble. And this thing is creating a beautiful trend line to the north side. We have not came back down and retested that 10-day moving average. No way, Jose. This thing said hold my beer. NVIDIA's on my side. We're going to continue to rip higher. So then where is my concern? If I'm talking nothing but golden rainbows, kisses, and butterflies, well, where is our concern? The IWM. That's where the concern is. Look at this. This is your Russell 2000, okay? This is the Russell 2000 ETF. And when we look at this, we can see we're still above a 50-day moving average. That's great. That's golden doodle. I love to see it. But we still are not getting that liftoff. It's still being held back here if you guys look, okay? This isn't the best sight to see. We want to see this thing trading somewhere around 209 right now, and it's not. Now, I will say this. If we can hold this 50-day moving average and we can hold this trend line, I'll just draw this trend line. This is just technical analysis. You guys will know I absolutely love technical analysis over fundamental analysis. And if we can bring the two together, we're going to be making some beautiful gains, But we'll start with the technical analysis always. And as long as we stay above this 50-day moving average, above this upward trend line, and break through 206, and the next area to break down is going to be 208 or 209, 210-ish really. I think that would be the safest bet if we say 210. If we can get through 210 and start ripping to the north side, that would look beautiful for the IWM. But we know it's a lagger. We know that QQQs is leading this rally, okay, off of the previous pullback. QQQs is leading this rally with NVIDIA pushing it from the backside, okay? So IWM, that's my worry. That's where I'm a little concerned there, okay? Now we can look at a few other things, but I'm going to run through these. We have the Dow Jones Industrial, a bigger pullback than expected. Now, I don't really care to look at the Dow Jones Industrial. It's been very choppy lately. We aren't seeing really consistent moves. It breaks down fast, it rips up fast, it's breaking down fast again. I don't really care to see this, but we do have to take into note that it's broken below these moving averages. Now, will it hold its 50-day moving average? We will have to see, but we want to at least take into consideration that the Dow Jones is breaking below some of its very important moving averages. Now, the RSP. This is what I like to look at. This is the equally weighted S&P 500 moving average. Why do we look at this? Because we want to see breadth in the market. I don't know why they spell it with a D, but it's breadth, okay? It's breadth in the market, which means instead of seeing where the tech's getting it all, or health is getting it all, or biotech, or consumer staples, whatever it is, we want to see that money is flowing into the market in all different areas. It's in a good area because it's above a 50-day moving average, and just like the IWM, it's holding an uptrend. But I still see this being able to pull back some more, okay? We are just holding above those all-time previous highs. What do I mean by that? Well, if we look at the all-time previous highs back here in January of 2022, you can see it was sitting at 165. We are just above that by $1. If it holds that area and continues to hold that area, I think that is a great look for the overall market in overall sectors, okay? Now, with that being said, we have the VIX Volatility Index. The VIX Volatility Index is your fear gauge. We don't want to see fear in the market. If there's fear in the market, people start selling off hard and quick. The fear gauge has came down significantly. We had a beautiful pop here. This is when the overall Middle Eastern tension started to happen. It sold off very, very hard. And you can see here with a nice little pop up. That was the sell-off to the 10-day moving average as we talked about for weeks. We finally got that. I pressed the gas on quite a few stocks, which we can go over soon. And now it's dropping back off to its original area of 1195. So that being said, my overall confluency in the market is going to tell me we are 100% still risk on. Even if we don't look at all of this and we keep it simple, stupid, we'll see that in the S&P 500, we're above all rising moving averages. Everything is lining up. We have the 10 over the 21 over the 30 over the 50, and we are clear above that 200-day moving average. So this is a beautiful sign in the overall market. What the market does tomorrow, totally unsure of. But what I will say is I'll give you two scenarios. We pull back, we retest this area again, just like we did. We retested this $500 psychological and technical area twice before we rip tater chip. I can definitely see after all of this push up, we could come down and retest this area again at this 525. Why not? But if we break above this 531, we're going to continue to head on this crazy trajectory to the north side. Regardless, I am still risk on. Regardless, I'm still holding on to the strong stocks that I have taken a part of. Nadayo, I'm glad to see you made it, brother. Thank you so much for joining. All right, guys, so that is our first little segment. We went through the S&P 500. We went through the IWM and the overall tech-heavy QQQs. We went over the VIX Volatility Index, the fear gauge, and we went over the equally weighted RSP. I have to open up the mics, guys. I got to ask you, is there any questions here? Do you have any questions over the overall market? Because you need to understand, when you have the overall market is going to tell us if we find something juicy that we like. First, we have to look at the market. We have to say, is the market willing to take our bets? Is the market willing to cooperate? Because remember, all tides rise boats. I don't think that's exactly how it works, or that's exactly how that's said. But if rising tides lift boats, I believe is how it's actually supposed to be said. So if the rising tide, the S&P 500, is going to lift the boats, which are the stocks, the relatively strong stocks in the market, now's the time to press the gas. That's why we look at these stocks. That's why we see the state of the market. Now, do you guys have any questions before we carry on? All right. You guys are geniuses. I love it. Nobody has any questions. You're making my life way too easy. So next up, we'll look at the economic calendar. And if you guys think of something, before we get too far away from it, just chime in. You're more than welcome. Just pop in, unmute yourself, and ask whatever that you would like. Predator's in the building. I didn't even see you sneak in here, brother. I'm glad you made it. Good to see you. Glad to have you. Vix, I seen that you snuck in here.
All the way in the back.
All the way in the back. You snuck in the back. Vix, I seen that you popped in here. It looks like your mic was hot when you joined, but I'm glad to see that you're in here. And guys, always keep in mind, we're going to go over the economic calendar here. We're going to make sure that the economic calendar is suitable. I want you guys to know what's going on with the economic calendar. But first, I want you to look over here on the right side of my chart. This is my YouTube. I work very, very hard for multiple people just to get this thing lifted off. And I tell you, the team that we have, the community that we have that is in our Discord has been so fruitful for this channel. We are all working so hard. We're up to 821 subscribers. So if you haven't already, find me on YouTube, hit that like, hit that subscribe button, and then in there, you'll find under some of these videos, or if you would like, you can reach out to Dan Bob, and he will send you a private link to join our Discord. We also have a Discord, and we meet up every night at 9, and that is just what we do. That's what we do, baby. And now we're here for Robinhood Stock Market Watchlist to help entice some of the newer viewers to pop in with us and join the ever-growing team. You're more than welcome to grow to be with us, and so that way you can stay on top of everything that's going on. Our team is just absolutely kick-ass. I'm telling you, I love being with them. A lot of them have saved me money, made me money, and brought my attention to stocks that I was not aware of, because you cannot follow each and every stock that's in the market. I follow a group of stocks. Other people follow groups of stocks, and they get called out in our chat, and it's just beautiful. Predator actually saved me quite a bit of money on ESPN or ENPH the other day. Made 110 bucks, and then he got me yeet skeetily doing right out of that stock because the ideas didn't line up. And once he brought it to my attention, I got out of that stock. And man, I tell you, we're gonna have a little chat about that later, Predator. But I appreciate you, brother. So yeah, go ahead and hit that like, hit that subscribe button in the YouTube, and of course, join our Discord. You're more than welcome to. Everything's free, guys. Everything's free. Now let's jump right into the economic calendar after I just yapped on. It sounded like I was selling a course or something. So the economic calendar, we just use investing.com. We look at the week ahead. I want to talk to you guys about what is going on. So Thursday, May 30th, you need to understand at 8:30, we have two very key economic data coming out. We have gross domestic price, which is going to be your overall inflation data, your inflationary data. Old Papa Powell is going to take a look at this data, and he is going to adjust the hikes on this. You're definitely 100%, when this comes out, this has more influence on your rate hikes or rate cuts or rate stays through the Fed than anything else, Okay, now they ingest all the data, but this one here is the most influential. So if it comes out higher than expected, you're definitely going to see the market come down. We want to see a lower GDP rating. Okay, so keep that in mind. This GDP is at 1.3% is the forecast. The previous was 3.4%. So the forecast is forecasting much, much lower. And if we get that forecast or even lower than its actual forecast, you're going to see the market go bonkers. Now, we also have seen some negative data come out in the market, and the market just shrugged it off as well. But if the market reacts properly to the gross domestic price or the overall inflationary data being higher, you're going to see the market come down, okay? We don't want to see inflation showing that it's sticky. We don't want to see inflation showing that it's hot. Next up on that same day, same time, 8:30, May 30th, on Thursday, initial jobless claims is coming out. What is initial jobless claims? It's the overall group of Americans that are going to be filing for that unemployment. If more Americans are filing for unemployment, that's actually going to show a positive influence on the market. Why? Because if less people are working, less people are spending, that means there's less demand. That means the overall expenditures, the overall prices for things have to come down. Okay? Less demand for things means there's more supply. More supply means it makes things cheaper. And the only reason why everything is so damn expensive is because the overall interest rates are higher. So if more people are without a job and more people are spending less money, Papa Powell is more enticed to reduce those rates. And it's been proven through history, when the Fed starts to reduce their rates, the market continues higher. Okay, so that's where we're at in the market with the initial jobless claims. It sounds confusing, guys, but if you just subscribe to me, I do this all in bite-sized data. So when the initial jobless claims comes out at 8:30, by 9:30, I already have a piece of data coming out. Okay, usually by 9, I already have a piece of data coming out to you, a YouTube short that consolidates this in just the smallest, easiest way for you to understand it. And that's the best way to understand it, is hearing it over and over and over again until you understand it yourself. Then, of course, on Friday, the core PCE, the month over month and year over year, is going to be coming out at 8:30. Okay, and if we just take a look at what core PCE is, I'll just read it right in front of you guys so you have a better understanding. It is the price index that is less volatile. Okay, it's going to measure the seasonal food and energy. It actually excludes the seasonal food and energy, meaning it's the prices that we pay on goods aside from energy, like gases, aside from foods like eggs. Okay, so it's actually going to show what we're paying stuff on. If we scroll down here, we can see it's been coming down, so it's been looking very, very good. Now they're expecting it actually to come out higher, the PCE index higher than its forecast. I'm sorry, not higher. It came out the last time higher than its forecast. The forecast was 2.6%, and then it came out at 2.8%, which it came out higher. But if you guys were with me, you'll find out that even though it came out higher, the market, this is a piece of the data, the market shrugged it off. It didn't care that it was a little higher. It wasn't high enough to really affect the overall market. So the overall market said, we don't care. Initially it came down, but then it went right back up. Okay, so it didn't care for this so much. Now it's asking, let's see, what's the forecast that it's asking for? Of course, I clicked off of it. Here we go. Let me hide this here for you, and we'll see the next week. So the forecasted for the core PCE is going to be 2.8%. So we're looking for anything lower than 2.8% on that core PCE data, okay? So that is what we have coming up in the economic calendar. Two main dates. Thursday at 8:30, we have GDP initial jobless claims, and Friday is going to be at 8:30 as well for the core PCE, month over month and year over year. Do we have any questions about the data? I will do my absolute best to answer your questions. If not, forever hold your peace. Alrighty, that's great. I see that we got Jet Mitapuria. I think I said that absolutely beautifully. It's good to have you in here, buddy. Scooby-Doo, I seen that you snuck in the back door. Good to see you in here. And Volpew, that sounds like a gun. Shooting it sounds like a car gun. Volvo shooting a gun. Volvo, pew pew. So next up, guys, we're going to be going over the overall. Well, actually, before we go over the watch list, because we ran through this pretty quick, Turtle made it in the building. What's going on, Turtle? Glad to see that you're here. Okay, so next up, what we are going to go over, guys, I'll just go over what I am in currently right now, my current account. So that way you guys have a better understanding of what I play, how I play them. And if your ideas line up with ours, you're more than welcome to join our Discord. It's absolutely free. You're more than welcome to click that like and subscribe on my YouTube channel at David Worrell on YouTube. We play trend breakouts. We play base breakouts. And I'll just show you a few that we have played in the past few days. ASPN. This was a beautiful breakout. We called out in the chat multiple times. You can see we had a huge move up on earnings. This was an episodic pivot that broke up much higher. It pulled back and it showed an area of resistance right up here at this 2750. We've seen that it bonked its head once, came down twice, 3 times, and 4 times. At that 4 times, it broke through. Some of us are still holding from this episodic pivot, but then some of us got in the just before the end of day on Thursday it was, and then Friday it ended up having continuation. So this is a beautiful base breakout. That's one of my holdings. We also have FLEX. This was called out by Covey, a gentleman that's actually in the building right now. Shout out to you, Adam, my right-hand man. This boy calls out some beautiful base trade setups. That's why you need to be a part of this crew, guys, because these base setups that he calls out and the trend break setups that also find confluency with his overall strategies, with our powers combined, we make Captain Planet. And Captain Planet likes to rip tater chip to the north side. This flex has gone all the way up to 33.17, and we have taken out a piece at 30.37 and also 31.95. This last piece that we have in here is still made me over $346. Just this one last piece in here. I held 300 shares. Of course, we could be talking about, well, what if I held all of it? Well, we like to pay ourselves into these things, okay? So this FLEX is doing absolutely phenomenal job and paying myself into it. It's a hands-free trade. Now, right now, this isn't something you get into now because it's clearly extended. It's extended from its 10 and 21-day moving average. We don't want to see anybody getting into this, but we want you to keen your eye into these base break setups. You see the red line here? That is the base break trade. This green line is where I ended up getting in, and these white lines will always be where I have taken profit. Now, with that being said, if this thing does have a pullback and creates a new trend or a new base, that will be a base on top of a base or a trend on top of a base, and that is another very bullish sign. And if we can find that, we will obviously alert everybody that is in our Discord for that. I'm also in Fannie Mae, FNMAS. Now, this is a slower mover at 3.3%. We like to look at those faster movers at 4% average daily range. But when I see a setup like this, it's hard not to take. This is the trend break strategy that I was just talking about. This trend break strategy actually was called out by Mo Wealth, another trader that was in our building. He did not actually take this. In our Discord community. He did not actually take this. I ended up taking this. I think he was driving at the time, which we don't advocate to driving and trading, although I think we've all done it. Don't do it. It's very dangerous. This thing broke out, rip tater chip to the north side. I'm only holding about 400 shares of this, but it's something that I actually confided in Adam with, and I said, hey, if I need more buying power, I'm going to end up selling this thing, but it's just 400 shares. I'm up a very small amount. I'm up $136 on this trade. I should be up much more, guys, but this is a trade that I'm at least holding on till 6, and then I'll probably relinquish at least half of my shares and let the rest ride unless I need more buying power. Next up is going to be Google. This was a beautiful trend breakout trade. Yes, you're going to hear that I play these trend breakouts quite often. We had this huge move up on earnings. It pulled back, rode on a 10-day moving average, followed this trend line down, had what I call an undercut and rally, meaning it undercut a lot of this buying area. Undercut and then got bought right back up, which in our eyes, it is a huge bullish sign. We like to see that. So on the trend breakout the very next day, we got in about 100 shares, and this white line I sold half, and then we're holding onto this last piece until it breaks that 10-day moving average. On Friday, you can see it ripped right back up, so we are still in a beautiful trend to the north side on Google, which is, of course, tech. Netflix, now this thing has just been very strong compared to the overall market. We ended up grabbing this right at this base breakout here. I used previous base, previous base, previous base, and right here when it broke out, holding this 10-day moving average is a huge push up. We played that base breakout to the north side. We've taken out shares here at 638 and shares at 650. So we like to see that. Now I'm just holding on to one last piece. We're up about $231 on these last 10 shares. So I've made a lot of money on this trade, and we just have another 231 shares in this. We're going to let this thing ride until it breaks that 10-day moving average. I don't really care. I've already paid myself so handsomely in this trade. I don't care what happens. And then last but not least, we did play NVIDIA. I played NVIDIA a little bit different than you would think. Of course, in NVIDIA, you can see we're up wildly. I've already paid myself 1/4 of the shares, but we're up about $631 on NVIDIA on this trade. And I'll just go ahead and zoom in and show you exactly how we played this. This is an episodic pivot. Because of the earnings beat, you can see we had a base breakout here. This base breakout at 44.21 was on earnings. And when it took off and moved higher, I do not play earnings because I consider it a gamble. It pushed up higher and then traded sideways. When it did that, I decided to play an opening range breakout. That opening range breakout was taken on the 1 minute time frame. So if we go ahead and we zoom ourselves over here on the 1 minute time frame, you will see exactly why I did that. Here's earnings. Here is the open of the day. Here's the 1 minute time frame. This is the first opening candle. It creates a high of 50.09 or $50. So we can think of things as psychological. And then you have your base bottom here at 49.23. So we're risking around $1 to $1.20 on this trade. Okay, you can take that dollar, multiply it by however many shares you want to take. And this is, by the way, guys, this is NVDL. This is an leveraged NVIDIA. So instead of taking 1,050 shares of NVIDIA, we can come over to NVDL and take 1,000 shares at a fraction of the cost. Okay, so if you have a smaller account, let's say you're under $100,000, you can come over here and play NVDL, and it's much, much cheaper, and you're going to get the same moves. It moves much, much faster at 6.3%. Okay, so you're going to get the same moves of the stock, only in a levered ETF. Now, we got into this trade. We got out 1/4 once it broke higher to help protect our gains. And then we just moved our stop to the break of the bottom of that day on the 1 minute time frame. You can see that by the end of the day, it held all those gains. And by the end of the day, the next day, we made new all-time highs at 54.40. Or if we look at NVDA, you can see we are at all-time highs at 1,070. So that's a beautiful sight to see when you're in a trade playing those opening range breakouts. So base breakouts, trend breakouts, and opening range breakouts on earnings that have catalysts, whether it is earnings per share, whether it's revenue, or whether it's a new drug, a new fat loss weight pill, because that's what's hot right now. That is what we're looking to take. And you can learn it all here through David Worrell YouTube or our Discord, which you're more than welcome to join. Now, we have a few stocks that we can go through, these base breakouts and trend breakout setups, and we can go through each and every one of those so that way everybody has a better understanding of a watch list that they might be able to throw on, that they might be able to play. And if you're unfamiliar of how we play these, you can look over here on my screen. We actually have a base breakout strategy. We go through all of this, guys. We did this in my Discord. All you have to do is click on this. Watch this all the way through. It's a little over an hour long, and you can have a complete understanding not of only the base breakout strategy, but how to do it using risk management. And if you watch anybody out there on YouTube or any trader and they don't talk about risk management first and foremost, you need to run to the hills. We always talk about risk management because you need to live to trade another day. If you're a new trader, you need to survive until tomorrow and the next day and the next day because it takes experience, it takes learning, okay? We also have this trend breakout strategy as well. These are all free, guys. They are still free. We don't plan on making a course anytime soon, but if we do, these are what's going to go in here. These are very, very popular, and these are extremely, extremely helpful. If you literally watch these over and over and over again, and you learn how to trade these, and you find the proper stocks that have relative strength, theme, or the hot sector, you're going to make a ton of money in this market. You really will. It's that simple. It's that simple. Identifying the overall market conditions, if we're in a bull market, if you can identify those like we did when you first joined, then identifying the structure and the strategy of the trade, whether it's a trend breakout, a base breakout, or an episodic pivot, and then using risk management to get into those stocks in order to capitalize and grow your account, no matter what size your account. I don't care if you only got, $300-400. If you find those right trades, you're going to make a lot of money, okay? And that's what we like to do here. Now, I'm going to go through what we have on our list. We'll start with a few trades. There's going to be a few that are going to be a little skeptical, but I will let you know if they are skeptical or not, just because we don't want you guys looking at crap stocks and not knowing about it, okay? So if you guys didn't know already, gold, silver, it's in play. It's very hot right now. Of course, I've had a negative bias on these stocks, but it's definitely one to keep an eye on. I do like retests, okay? And so IAG is on the Investor Business Daily leader here. And this is a breakout strategy. It broke out here. You can see it broke out at $3.81. Broke out, rip, tater, chip, pulled right on back, and now is bouncing off that same breakout area. It's also bouncing out on volume. So this might be one to keep an eye on. If it can set up, get tighter here before it breaks out higher. This isn't so much my structure or my play, but it's something I'm keeping an eye on, as well as HBM. Now, FSM is a silver. You can see that this formed a nice trend break on the 10-day moving average. So this thing is actually working out. If I can actually draw this damn thing, there we go. This thing had a nice breakout here. Nice push up higher, extended from the 10-day, but pushed up higher on volume and then pulled back on less volume here and then broke back out on higher volume. So this is a very good structure, very good play, but now it is back to being extended, so we just have to keep an eye on it. BLBD, you can see this is starting to form a structure. We want to see this thing maybe come back up and retest multiple times at this $55-75 area. Maybe just bounce up until that 10 and 21-day moving average can get tighter. But you can see it had this beautiful earnings growth, over double on its earnings per share on BLBD. Now, I don't know what BLBD is. Let's just take a look at it up, BLBD, because we want to see what kind of sector we're looking at. Now, this is consumer durables. It's not the worst sector to be in, but it's definitely looking better than most. So this looks pretty good. I like it. Let's look at AEM. So AEM is kind of creating this trend line down right here. It's not the prettiest structure, but if it breaks up above this and gets back on its trajectory, this might be one that we want to keep an eye on. So I'm just going to set an alert here because this almost looks like a base retest here at $68. Okay, so if it gets above that, that might have continuation here, trying to hold that 21-day moving average. But do keep in mind, it did break this 10-day moving average. That's what it's held most of the time. So this might be an undercut and rally, but I think we need to give it a little bit more time to see. So now we have these are ones that you really want to keep an eye on, guys. Okay, so we're going to get into some juicy ones. Let me take a little sip. Very, very good. PWFL. We've been watching Powerfleet. We really wanted to see this thing break out on this day and get above that 560 area. We really like this. Okay, when I say we, I'm talking about my Discord crew. We're keeping a close eye on this. This base breakout here did get very, very tight. We had a pullback. It's holding its 21-day moving average. We want to see it continue to hold that, continue to come back up. I don't care how long it trades. If it wants to do this for another week and then break above this 5.6, then let's go ahead and get in and make some money. These aren't buy or sell recommendations. These are my ideas, not yours, and we should treat them as such. But I'll tell you this, if it breaks above that $5.60, I will definitely be giving a shot using the low of that same day. So we always want to use risk management, of course. PAHC, this has been brought up numerous times in the Discord, and that's why it stays on my watch list. This is a beautiful structure. You get a big push up here. You get a nice basing structure here. You get a low that's being held very well at 1635, and then it pushes up higher, breaking above this area and continues higher, now creating a base almost a base on top of a base, which is probably the best structure that I've seen happen recently in FSLR, but we'll get to that in just a second. So if this can get above this area of 1869, that is going to be the best area to break out on. And I promise, if this gets above this, that might be a nice juicy one to take. The only thing that concerns me with PAHC is that it's in the, well, actually health and technology. So health and technology is XLV. Yes, XLV. So let's take a look at health and technology on the overall ETF. And you can see here on the overall ETF of health and technology, you can see we are still lingering around those all-time highs. So it's still looking good for healthcare sector stocks. We are going to wait and see what's going to happen here. Maybe it bounced off the 21 and continues higher. But it's not, excuse me, guys. Whew, that yawn crept up on me. But if it just can break above this 148.27, currently I believe it's trading roughly around 144.33. So if it can start climbing back up there and create new higher low off of this last low of 138, we can see that this stock, PAHC, has a very good opportunity to continue to climb higher. Okay. Now, ENPH, this is definitely one to keep an eye on. You know, we looked up ENPH. I was in this in a short, which was very bad, and I'm very happy that Predator was in the building with me because I just assumed that this was a energy stock. They do more than just produce energy. This is a semiconductor and electric technology, and I also think that they are in the I want to say they're in the solar sector as well. Home energy solutions that manage energy generation, energy storage. Yeah, so energy storage is going to be also a part of your overall solar sector. Okay, if it has to do with energy storage. Now look at this, guys. This is what's beautiful about this structure. So let me go back to here. Let me show you this. Look at this trend breakout right here. Okay, so it broke out of this trend and it's ripping to the north side. So we want to keep a close eye on ENPH because if it moves with FSLR, you're going to see FSLR had that double base. We had a basing structure, a base on top of a base, and then a rip tater chip to the north side. This thing is absolutely enormous on volume. We need to wait for this thing to set something back up. First Solar took off and it took us by storm. We were calling this out. We were calling this out in Discord. We were mentioning it first, but the issue is nobody had their alert set at this 199 area, this 199 or psychological $200 area. If you would have just got into this, you would be up wildly, guys. You would be up right now. You would be up 38%. Take whatever amount you want to put into FSLR and mark that up 38% in 4 days. That is absolutely amazing. Those are the stocks we want to be a part of, and this stock is in play, okay? Now, there's a couple other more, there are a couple of more penny stocks that we're going to look at, and then we're gonna cut it off. But before I go into these stocks, I want to ask: is there any questions? Is there any stocks that you would like me to take a look at? How about that, guys? If there is any stocks that you want me to take a look at, unmute yourself. Let me know right now. Or if you have any questions about anything that we've went over, let me know right now. Or forever hold your peace, because I'm just going to yap. I'm going to talk until time's up. I'll take a sip while I wait.
I have two, David.
Let's go for it, Dan Bob. What you got for me?
I have Seco, CECO,
Okay.
and Owl.
What was that second one?
Owl, like the bird.
Oh, okay. AWL. AWL.
No,
So,
OWL. Owl.
I'm sorry. What did I say? AWL?
Yeah.
I'm sorry. I typed in OWL. CECO. So CECO Environmental. We can see the base breakout that I had marked out here was 2440. And then we had a base on top of a base, it looks like right here, roughly around 2533. Or it could be argued it was around 2550. That's A-OK, but right now it's at 2604. A little extended for myself, breaching new all-time highs. What I would like to see if I wanted to get into the stock, for it to pull back and trade within that 2580 area again, just trading sideways, holding above the 10-day moving average and getting tighter. But this thing looks like it's already starting to take off. Okay, it's hard to play risk management when you're already above that base breakout area, but this is looking fruitful. It's clearly on a major uptrend, and this is a very nice stock. Let's just go ahead, just so I understand what this is. So CECO, it looks like it is the producers, manufacturing, or industrial machinery. And we know industrial has been pretty hot lately, as CECO Environmental Corporate engages in the provisions of engineering technology and solutions. It offers services in the field of environment, energy, fluid handling, and filtration. The firm operates through the following segments: energy solutions, industrial solutions, and fluid handling solutions. So that is pretty cool. It looks like they're doing very, very well, and they have been for an awfully long time. Let's take a look at OWL. So OWL looks like it's actually setting up here, and it looks like it's very close to that breakout area. I think what I'm going to do is I'm going to set my alert here. Actually, I'm not going to set my alert. And the only reason why is there's a lot of stock setting up here, and this is a little bit slower a mover. Now, it's okay to be in the slower movers, guys. This is a base on top of a base as well. So you know what? I am going to set my alarm to the high of day, and we'll take a look at the volume in the morning on Tuesday to see what it's giving us, because that 2.6 might really get to ramping and heading higher if this thing wants to go. These base on bases, though, I'm telling you, they're a very, very solid structure. If you get a base on top of a base, you can see this thing really get some lift off. It definitely shows that there's a lot more supply than there is demand. Nobody's selling, or I'm sorry, there's sellers. Lots of buyers. There's no more sellers. It goes higher. Then we get sellers, sellers, sellers. If we eliminate all sellers and there's only buyers, that means that there's so much demand for the stock that it's going to go much, much higher. So Blue Owl Cap is definitely looking like a formidable stock, only it's just a slower mover. What else you guys got for me? You got anything else? We got about, I don't know, 5 or 10 more minutes left. If you guys come up with anything, let me know. I'll go through a few more stocks. This section here, though, I'm just going to be flipping through. This is more for me than it is you. I want to see these stocks. So like FSM, you can see that it had this trend breakout. That's my strategy. Miss stock. You're going to see I miss a lot of stocks. BLBD looks like it's setting up. We already went through these. Excuse me. Let me go back up here to POWL. POWL, now this is one that we did miss. This is a beautiful trend break. I called it out, but in the morning, it was a little too spready for me, and I ended up getting distracted. I did not end up taking this stock, but yeah, this thing just took off, breached all-time new highs on Friday. So you'll love to see it when you're looking at a stock and it works out beautifully. I don't get angry so much anymore as I used to. As Adam remembers, I would just be so pissed when I would miss stocks. But now it's more like I'm just glad that I am watching the right things. I'm glad to see things in the market working out. And I'm glad to see things are being fruitful, because I come from a market that was not working out well at all. Anything that you bought it was better to be a short sailor at that point in time than it is now, where everything's breaking up. Your trend breaks are working, your base breakouts are working, the market is working in your favor. Next up is Hood. Now, Hood had a nice breakout here. There was no real structure here, but we're just going to go through this sector because Coin had a nice trend breakout. We had iBit, which is following Bitcoin, is looking decent in this area, now above a 50-day moving average. Mara as well above that 50-day moving average and showing some ranging area. So I don't know if anybody's into range trading, but you can see we have a beautiful range here on Mara, and it's not to be eluded against, because this could be beautiful. Right now you're playing in the middle, or diddling in the middle, as some people like to call it. This here is just range trading. So let's say, you're having a weird day and it comes back down. It's pretty safe to say it's going to hold this trend, and you can use risk management to play off of this trend. We could even extend this, and we could say, well, how long is it going to stay within this area? And we could play a short here, we could play a long here, and you could play within this range trading. Okay, so that's range trading. That's beautiful look overall. We also have CLSK, which is showing me a trend break set up here. I'm going to go ahead and set my alert here, because if Bitcoin starts to rip tater chip in the morning, these are going to be the stocks I'm looking at to take. Now, this is uranium. This is all looking pretty good. My main stock for uranium that I'm looking at is this UEC. It moves 4.5%, and I have my alert on a trend breakout at 735. Okay, 735 looks really, really good. I like it, and you should like it as well. You should set your alert and then keep an eye on it after it does. We also have Reddit. Reddit's been very volatile. They got some news with ChatGPT using their data help increase their, and they'll get some revenue out of that. So that looks good. I'm just keeping an eye on it. I can tell when I was playing Reddit that they have a very good specialist running this. I took one too many shares. The specialist just smacked me around. They did really, really good. I'm never blaming the specialist. That's his job, and he's doing a very good job at it. I blame myself for not being able to read a level 2 and taking a stock that had too big of a spread on it. Okay, so for example, right now, the spread on this thing is 20 cents. And when I took it, I think it was around 20, 25 cents. That's way too spready. I should have known better. I lost very little on this. I only tried it once before I caught myself doing something silly. But I tell you guys, on Friday, I had the absolute best day I've ever had in the market. So I'm not going to look or frown upon RDDT, but I will always say I'm a loser unless I'm learning. And I learned from RDDT. I wiped my hands clean of a $100 loss, and I walked away. Now, we got to bring up GME, guys. You have to, because it is in play. I think that we are going to see a bounce off of this. If this is the bounce right here to this $20 area, I missed the short opportunity, but I do, and I can see this thing going much higher. Okay, I think this thing is not over yet. It could be, but I do think when institutional ownership and other traders get a hold of this thing, they're going to say, well, this isn't over. They're going to create a new higher or a new lower high out of this, and it's going to head down. I have my market 41.69. We'll see where this thing wants to go, but it's definitely, if you're looking to short a play or go long, these things might set up, wait for your volume, wait for your opportunity. I'm personally waiting for the short opportunity. I don't believe in these stocks, but it is what it is. We're all traders. CENX. Now, this is one that got some of us in. I ended up taking out. This is why we take profits, guys. I played this base breakout at around this 1835. It ripped to the north side. I got out over half of my shares, and then I moved my stop up to break even. So you can see we moved up. We made, maybe a couple $100. Then this thing came right back down and stopped me out for break even on the last. So we made a couple $100. It got out, but I always like to keep an eye on these stocks because a lot of times there's been many, many trades where it comes back and it bites me in the ass because it comes back and boom, it rips right back at that same area that I bought it, and then it just heads higher without me. So I will get back into CENX, especially because gold, silver is all heading much higher. It's all still on its trend. Even though I am still a bear, if I see a nice breakout, I will take it and then pay myself right away into the very first push. So CENX, being a part of aluminum, I don't see why it can't move higher. BA, so Boeing took a huge dump, and you can see that this thing is just failing. I think it can come down much, much lower until it prove itself. New higher lows on the daily, above a 200-day moving average, and a curling 200 to the north side. I missed this short, but that's A-okay. I was in plenty of other things, and I didn't have much buying power anyway. Boeing is a nice short trade idea. And you know what, guys? We're going to go ahead and ask to see if anybody has any more questions. Of course, I'm going to say and let you know, you're more than welcome to join our Discord. It's absolutely free. We go over these things. Tomorrow, we actually will be going over a lot of the base breakout trades at 9 o'clock with Adam. I'll be in there as well to be a part of that so I can see what he's got going on. And we're going to let him take the reins on that one and help me out a little bit so I don't lose my voice having a meeting every single night. My right-hand man, my boy, and he comes out with some amazing watch lists. So I definitely would like to see everybody in there Monday after you're done with your festivities. We'll see you at 9 in the Discord there. Of course, hit that like and subscribe on my YouTube channel for David Worrell. But in there, you can join the Discord, and we'll see you guys tomorrow night at 9. But before we take off, guys, do we have any questions? Let's unmute Jet. Let's unmute them. Here we go. Turtle, Volve, Pew, Yosef, Scooby-Doo, Norm, Nadayo, Jat, Predator, Dan, Bob, B, Stewie, and of course, my right-hand man, Adam. Do you guys have any questions for me? Anything whatsoever?
I got 3 quick tickers that you might want to take a peek at, and then I got a surprise to talk to you about after the meeting's over.
All right, let's take a little peeky gander at these 3 tickers.
CLW.
CLW. CLW is moving higher. It's a little bit slower of a mover at 3.5%, but it's not too far off of it. It broke out of its all-time high here at 45.90. We're just going to say 46 to make it a psychological area. So that's really nice to see when you see a nice breakout right here like that. And it's not showing us a trade just yet. We're going to want to see this thing make a base or make a trend before we can get in it. But you can clearly see this thing is a leader. What's the next one?
DBD.
BBB?
No, Dead by Daylight.
DBD. Nice. I like how you did that. Oh, it looks like DBD is forming a nice base here. I would like to obviously wait for a few more days. Let this 10-day moving average catch up. It moves 3.2%, so it's a slower mover, but this is a nice look. Also, if we zoom out here, you can see earnings, wow, really catapulted this thing to the north side, and it has not stopped. Rip, rip, tater, chip to the north side, and now it's just trading sideways, and that sideways action is a great opportunity for institutional ownerships to buy more or sell into that area. So if it can hold an area and break up higher, we're going to use this $45 as its psychological and technical area of resistance of selling. If it can get above that 45 on volume in the 5-minute, this might be a beautiful stock to take. So far, that's 2 for 2, Predator. What you got on your third one?
This is another slow mover. ODC.
ODC, 3.1%, not the slowest mover, but it is a little bit slower than we like. We like to see anything over 4%, but you cannot argue with price action. This thing is looking really good. This is more of my trend break strategy here. You can see on the end of the day on Friday, it broke above that $82 area, and it looked like it did on lower volume. So it wasn't just ready yet, but it's holding that 10-day moving average handsomely. It's holding it very, very well. It's starting to get very, very tight now. So if we just set an alert right here and we wait for that trend breakout, this might be one that you want to keep on your list because it is definitely a leader in the market. Look at this thing going straight up, guys. It's definitely doing things that you would want to see in a stock that you would want to be in. So very, very beautiful. And of course, Predator, we'll have a little chat afterwards. Blind Joker, I seen you just snuck in the back door. If you don't get what you wanted to out of this, I'll have this uploaded by the end of the night so you can watch it all the way through. But do keep in mind, we have a YouTube. You're more than welcome to like and subscribe to that. We also have a Discord. We're going to be doing the watch list tomorrow night. Do we have any more questions, guys? Do we have any more questions, whether it's a ticker or a question on the economic calendar or anything that we do?
Just one question on that last ticker. What makes that a market leader exactly?
Well, I'm just saying it's a market leader because this thing has not pulled back. So if we would have to actually go into the industry and we would have to dig deeper. So I say it's a leader just because of the structure, the way that it's forming. This thing has not really pulled back. It hasn't done anything crazy. So I guess I can't really say, hey, this is a market leader because there might be things in this that are showing much more formidable as the leader of the sector. But when I say a market leader, I'm saying this thing has been on a trajectory where it just won't stop. So we go ahead and pull this. You can see that it's just ripping to the north side. So maybe I'll stay my tongue when I say that this is a market leader, but by the way of its structure, you can see this thing doesn't really, it doesn't really want to head back down. It's on a stage, what is this, 2? And it will not slow. So here's your stage 1, your stage 2, and we haven't seen anything, wanting to slow its trajectory. Okay, so that's the only reason why I say it's a leader. It is leading, right? It is leading in the overall market. So,
Gotcha. I was taking that in the traditional sense. That's why I was confused.
Yeah, no, and I think that's a great question. It also helps keep me in line too, because I don't want to say things that I shouldn't be saying, like market leader. When I say market leader, we think of NVIDIA, we think of LLY, we think of OXM, okay? Now, OXM is not leading the market, but it would be a market leader in the sense of it taking, you know, a foothold. If we're looking, and speaking of foothold, if we're looking at foothold, ONON or Nike would be the leader, or I want to say Snickers. It's not Snickers.
Skechers.
What is that, Bob?
Skechers.
Skechers. You can tell I'm hungry if I'm talking about shoes and I say Snickers, you know. Throwing on a couple of Snickers right now. But anyway, do we have any more questions, guys? We're getting really short on time here, so I'm just going to go ahead and cut it. Let me go ahead and say thank you, guys. I appreciate you being here. You're more than welcome to join our Discord like always, and we can always chat further there. But I'm going to go. I appreciate you guys hanging out with me. And if you missed any of this, I'm going to upload it. You'll see it through the Facebook. You'll see it in my YouTube. You'll see it all there. So thank you guys so much for joining me, and I hope you guys have an awesome, awesome night.